Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CLEARWAY ENERGY INC quarterly report. CLEARWAY Energy Inc. offers a diverse range of clean energy generation assets and services across the United States. The company's portfolio includes wind power, solar power, battery energy storage systems, BESS, dispatchable combustion-based power generation, assets, grid reliability services. These businesses and services are provided through two main segments: flexible generation and renewables, with a total of approximately 11.8 GW of gross capacity across 26 states. CLEARWAY Energy Inc. Stock price increase overview. The past year has seen a significant increase in CLEARWAY Energy's stock price, driven by several key factors. The company's strong Q3 2025 earnings, which surpassed analysts' expectations, contributed to a surge in the stock price. Additionally, strategic investments in renewable projects, such as wind repowering and solar acquisitions, have led analysts to increase their price targets for CWEN. The company's commitment to growth through these investments has also been reflected in its increased dividend, which has consistently risen over the past 5 years. Furthermore, CLEARWAY Energy's strong market positioning in clean energy has driven investor interest, resulting in a 52-week high stock price in November 2025. Overall, the combination of strong earnings, strategic investments, and positive financial guidance has contributed to CLEARWAY Energy's positive stock performance, with analysts maintaining a buy consensus rating and forecasting further increases in the stock price. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by long-term contractual arrangements, flexible generation, and renewables and storage. Specifically, the increase in energy revenue from flexible generation, plus $1 billion, and renewables and storage, plus $949 million, are significant contributors to revenue growth. Additionally, capacity revenue from renewables and storage, plus $269 million, also contributes to overall revenue growth. On the other hand, revenue decline is primarily driven by a decrease in operating revenues due to losses incurred on commodity contracts and lower generation at certain facilities. Specifically, the loss incurred on the MT, storm commodity contract, and lower energy revenue primarily driven by lower generation at certain facilities contribute to revenue decline. Overall, the drivers of revenue growth or decline are largely influenced by contractual arrangements, market conditions, and operational performance. Net income and profit margins shift. In Q3 2025, the net income of the company experienced a significant surge in Q3 2025, increasing by 122% to $60 million compared to the same period in 2024. This growth continued into the year, with a total net income of $69 million for $9 million 2025, a substantial increase from $11 million in 2024. However, this upward trend was not consistent across all periods. The company's net income actually declined by 114% in $9 million 2025 compared to the same period in 2024, dropping to minus $32 million. This discrepancy highlights the volatility of the company's financial performance. Profit margins also underwent changes during this period. In Q3 2025, the net margin reached approximately 55%, a notable increase from previous periods. Conversely, the operating income margin decreased by 19.1% in $9 million 2025 compared to the same period in 2024, indicating a decline in operational efficiency. The reasons behind these changes are attributed to a decrease in working capital and distributions from unconsolidated affiliates. These factors have had a significant impact on the company's financial performance, leading to fluctuations in net income and profit margins. The company's financial performance indicates a consistent generation of positive operating cash flow in recent years. In 2025, the company generated $511 million in operating cash flow, while in 2024 it was $578 million. These figures suggest that the company is successfully managing its operations to produce a steady stream of cash. The company's debt level has undergone significant fluctuations in recent years. Initially, long-term debt increased from $6,750 million to $8,084 million between 2024 and 2025, resulting in a rise of $1.334 billion. However, this trend was later contradicted by another report stating that the debt level decreased by approximately $496 million during the same period. Regarding interest expenses, there is also conflicting information. While one source indicates a decrease from $57 million to $8 million between 2024 and September 30, 2025, another report shows an increase from $139 million in 2024 to $297 million in 2025. Despite these discrepancies, it appears that the company's debt level has decreased by approximately $496 million. The interest expenses have also shown a mixed trend, with one source indicating a decrease and another showing an increase. Management is optimistic about the company's outlook, with a focus on clean energy and diversified contracted portfolio. They expect stable and growing dividend income, with plans to continue paying comparable cash dividends in the foreseeable future. The company is also expanding its renewable energy portfolio through acquisitions, such as Luna Valley and Pine Forest, which are expected to commence commercial operations by the end of 2025. Management strategy involves acquiring assets and consolidating them on a prospective basis, with a strong outlook for the renewables and storage segment due to long-term contracts in place. Overall, management is confident in the company's ability to grow its renewable energy portfolio through a combination of acquisitions and organic growth. Based on the provided financial summary, it can be concluded that the company has indeed paid dividends. This is evident from multiple references throughout the document, including specific dollar amounts and explicit statements confirming dividend payments. However, there is no mention of share buybacks or repurchases, indicating that this particular aspect of shareholder value distribution was not utilized by the company. That concludes the financial summary for CLEARWAY Energy INC. Feel free to comment below, and I will be happy to answer them when possible.